Oh yes, my favorite time of the year has finally come. Now I can take this big chunk of money that I worked hard to earn during the year and just give them to the government. Because taxes. Yay! If there's something that no person on earth has ever said, is that they like paying taxes. But what if I told you that there is a way for you to invest your money without paying any taxes on what you earn from them? Would that be worth a like to the video and subscribing to the channel? Yeah, I thought so. So generally, when you invest in the stock market, you are subject to two types of different taxes. The first one is capital gains tax, which you pay on the appreciation of the value of your investments. So for example, let's say that today you buy an Amazon stock for £1,000 and in 1 year time you sell that same stock for £1,500. In total you made a profit of £500 on which you will have to pay capital gains tax. And the second one is the tax on the dividend that you pay on all the dividends that you earn during the year. However, there is a completely legal way to avoid paying both of those taxes, and in this video I'm going to explain to you what it is and how it works. I don't want to keep you waiting too long, so the answer is an ISA. ISA is an acronym for Individual Savings Account, and it is a type of account that allows you to save and or invest your money without paying any money on the interest that they generate or on the profits that you make from your investments. As a little disclaimer, none of what I'm saying in this video constitutes financial advice. Please, before you do anything with your money, before you decide to invest them and where to invest them and how to invest them, always make sure to think with your own head and to contact your financial advisor that has your best interest in mind in order to make the best possible decision for you. So, to explain what an ISA is in practical terms, I'm gonna make a comparison, and stick with me because this is surely gonna be the craziest way everyone will ever use to explain to you what an ISA is. So, let's say that your money are seeds. Normally, you can use those seeds to trade with other people. So, for example, you need an egg, and you go to another person and you give them some seeds and they will give you that egg. Or you can trade those seeds for a pair of jeans, or anything you might need, right? And of course there will be times where you need a lot of different things and you give away a lot of seeds, and other times where you just don't need anything, or you know that winter is coming and there are tough times ahead, and so you want to save your seeds for when that time will come. The problem is that if you just put your seeds in a box and you store them, I don't know, in your garage, some of those seeds will die because of the cold. And that's inflation. So if you just keep your money in your checking account or under your mattress, you will suffer from inflation because the purchasing power of those money will decrease. Prices will raise with time, but the amount of money that you have saved will stay exactly the same. So the solution to this is invest in them. Or in our seeds example, is to plant them so that they can grow and give you back more seeds. So you can go to your garden, plant those seeds, and of course some of those plants might grow not very well or even die, and those are bad investments. Some other plants might grow extremely well and give you lots of seeds back, and those are good investments. But they all have a common problem, and those are insects that come and eat away at some of your plants. In case it wasn't clear, in our gardening example, insects represent taxes. They just come and eat away at a portion of everything you earn and all the profits you make from your investment. So the solution to all of your gardening problems or tax problems is an ISA, which in our example is represented by a greenhouse. There can be different brands of greenhouse, right? Those are all the different ISA providers. But they all have something in common. They all give you this big space where you can put your seed and you can plant them without being touched by the insects, because they will say outside they can't come in. Of course, even inside this greenhouse, some of your plants might still not grow very well or might still die. Some other plants might grow extremely well and still give you lots of seeds back. That doesn't change. An ISA is just the external container, the greenhouse that protects all of your plants from the insects or all of your money from the taxes. Whew. I mean, if you haven't done so already, after this you definitely need to drop a like to the video and subscribe to the channel. Come on. You just can't say no. Okay, enough with seeds and greenhouses, now let's go back to the real world. There are 4 different types of ISA accounts, and the difference between them is just the way you want to invest your money that you put into them. They also have like a couple different characteristics, but for the remainder of this video, I'm just gonna focus on the stocks and shares ISA, since that's what we're interested in. Just so you know, the other ones are cash ISA, innovative finance ISA, and lifetime ISA. As I was saying, there are different ISA providers as well, like all the different greenhouse brands that I was talking about. In my last video, I told you what I think some of the best investing platforms out there are. All of the ones that I mentioned also offer an ISA account, so if you're looking to open one and want to hear some suggestions or some different names and know some of the pros and cons of each one of them, make sure to go back and watch that video. I will link it down below in the description. An ISA also has a couple of restrictions, otherwise it would kinda be too good to be true, right? So the first one is that there's only a set amount of money that you can pay into your ISAs each year, and that's called your ISA allowance. For the current tax year, that's 2020-2021, the ISA allowance is £20,000, which means that in total you can only pay £20,000 into your ISA accounts. You can choose to pay £5,000 into your cash ISA and £15,000 into your stock and shares ISA, but you can't pay £25,000 into your stocks and shares ISA. And the second restriction is that you can only pay one ISA per type per each tax year. So for example, this year I could open a cash ISA and an innovative finance ISA, but I can't open 2 lifetime ISAs with 2 different providers. If you're still watching, make sure to comment below and write "Mamma mia!" just so you know that you got this far. But don't leave just yet, because there are 2
Caveat.
Thanks Google, that you definitely want to know about when it comes to a stock and shares ISA. The first one is that if you buy UK stocks, you're still gonna have to pay the stamp duty tax. That's only 0.5% of your investment, so it's nothing like huge or crazy, but it's still good to keep in mind. And the second one, and this is something that most people don't know, is that an ISA only saves you from UK taxes. But if you invest on foreign stocks, you're still gonna have to pay taxes on the dividends that those stocks give you. In particular, if you buy US stocks, the basic rate on those dividends is gonna be 30%. But it can be reduced to 15% if you complete a W8 ban form. Personally, I have an ISA account that I opened a few weeks ago with Trading212. One of the good things is that they're gonna complete the W8 ban form for me, so I don't have to do anything, and automatically I will only pay 15% of taxes on the dividends that I get from my US shares. If you're also looking to open an ISA or an investing account with Trading212, you can get a free share by using the link down below in the description and depositing at least £1 on your account. For full disclosure, if you do that, I will also get a free share, but that's not the reason why I recommended the platform. In fact, you will find 2 links in the description, and the second one is not an affiliate link. That's because if you believe that I'm only recommending Trading212 because I want to get the free share, you can just use the second link and I won't get anything. You won't either, but hey, that's your choice. Let's end with a little recap in case you got a little bit confused with all the numbers. If you want to invest in stocks and shares without paying any taxes on the money that you earn, the solution is to open an ISA, in particular a stock and shares ISA. You can only open one per tax year, and in the current tax year you can only pay in a maximum of £20,000. But there is no limit, no cap on the amount of money that you can have inside your account. So if you make some really good investments and you end up with £30,000, that's completely fine. And even in an ISA, you still need to pay the UK stamp duty tax, which is 0.5% of your investment on UK shares, and the foreign tax on dividends if you decide to invest on foreign companies. So that wraps up the video for today, and I'll see you next week.